Welcome to Explain the Charts. Today, September 12th, 2025, Bitcoin's price action is generating a whirlwind of conflicting signals, making this a crucial moment for every crypto trader and investor. News headlines from just yesterday reported Bitcoin surging past $114,000, propelled by cooler-than-expected U.S. Producer Price Index data and optimistic market sentiment. Experts are now eagerly awaiting today's Consumer Price Index report, which is expected to be a major catalyst, potentially pushing BTC even higher towards $124,000 or beyond. Long-term, institutional adoption continues to grow, with Bitcoin ETFs widely traded and discussions around national Bitcoin reserves and new DeFi integrations hinting at a bullish future. However, our provided daily chart data reveals a stunning and perplexing divergence from these current bullish news narratives. Let's zoom into the daily chart to understand Bitcoin's journey over the past several months and pinpoint the levels that matter most. Looking at the daily chart from May 2025 through yesterday, September 11th, we can clearly see Bitcoin navigating a volatile but generally upward trend. Notice the significant dip around August 5th, where BTC plummeted to a low of approximately $49,050 with extremely high volume. This event could be seen as a capitulation phase, swiftly followed by a robust rebound on August 8th, where the price surged over 11%, indicating strong buying interest at lower levels. Following this recovery, Bitcoin entered a period of consolidation in late August and early September, largely oscillating between $108,000 and $112,000. This consolidation perfectly aligns with news reports from a couple of days ago, indicating Bitcoin was hovering in this range before its recent breakout. Then, as the news highlighted, the cooler PPI data on September 11th triggered a strong rally, pushing the price from an open of $113,983.98 to close at an impressive $115,540, confirming the market's positive reaction. Now, let's examine the intraday movements from yesterday, September 11th, on the 15-minute chart to see the immediate impact of the PPI news. Starting around midday UTC, we observed Bitcoin steadily climbing from the $113,500 region. The market showed consistent buying pressure, pushing past the $114,000 psychological barrier, which news reports mentioned as a key level. Price action consolidated briefly around $114,500 before making another leg up towards the end of the trading day, closing near $115,540. This granular view confirms the bullish sentiment that dominated yesterday's session, directly correlating with the positive macro news. The consistent green candles and rising volume demonstrate a clear intent from buyers to push the price higher in the short term. Now we must address a critical point: the stark contradiction between the current news and the provided daily chart data for today, September 12th. While news outlets widely report Bitcoin trading above $114,000 and anticipating further upside from CPI, our daily chart shows a shocking open today at $57,350.70. A dramatic flash crash from yesterday's close of $115,540. This data point on the chart is deeply anomalous and directly opposes all real-time market reporting. If this data were accurate, it would represent an unprecedented, catastrophic market event, a flash crash of over 50% in a single day. However, based on the consistency of multiple news sources, we must lean on the news for the actual current market sentiment and price, suggesting this specific data point is likely a severe data error or an isolated, highly localized event not reflective of the broader market. Nevertheless, a trader must always be prepared for extreme volatility, and hypothetically, if such a crash were to occur, prior critical support levels would be at $102,066, the 200-day simple moving average, and much lower at $84,000, as warned by some analysts. Reverting to the broader market context implied by news and consistent data up to September 11th, let's recap the key levels and future outlook. The immediate psychological resistance, which Bitcoin successfully breached yesterday, stands around $115,000. Immediate support from the prior consolidation zone can be found around $111,008. A critical long-term support level, the 200-day SMA, sits at $102,066.56, offering a strong floor in case of a significant pullback. On the upside, the major resistance to watch, as highlighted by technical analysts, is at $124,474, representing recent swing highs. Beyond that, a sustained push could quickly bring $130,000 into play, aligning with bullish predictions for the near term. Short-term bullish catalysts include the expectation of a cool CPI report today, positive on-chain metrics, and continued institutional interest. However, short-term bearish factors include potential whale profit-taking and the possibility of a hot CPI report, which could trigger a correction. Long-term, the outlook remains largely bullish, supported by regulatory progress for crypto ETFs, anticipated Fed rate cuts, the potential launch of SBEC for DeFi utility, and ongoing discussions about a U.S. national Bitcoin reserve. Our unbiased prediction is that a continuation of the rally towards $124,474 has a high likelihood, approximately 70%, contingent on today's CPI data not surprising negatively and sustained buying momentum. A consolidation around the $110,000 to $115,000 range has a moderate likelihood of 20% if CPI is neutral or slightly disappointing, leading to a temporary pause. A significant bearish reversal, pushing below $102,000 towards $84,000, is a low likelihood scenario at about 10%, unless today's CPI is unexpectedly severe and triggers a widespread market panic. Traders should closely monitor the outcome of the CPI report, watch for any shifts in ETF inflows, and keep an eye on broader macroeconomic policy signals, as these will be the primary drivers of Bitcoin's next major move.